we are live from MBA Servicing. My guest is Tim Bowler, president of ICE Mortgage Technology. Tim, it is so great to speak to you today.
Diego, it's great to be hosted. So I really appreciate it and a chance to connect with you and your readers, your listeners. So it's a fabulous opportunity for me.
Yeah, so before we dive in, could you briefly introduce yourself and also your role at ICE?
Sure. So Tim Bowler, the president of ICE Mortgage Technology, which is the business that we have at Intercontinental Exchange, or what's commonly referred to as ICE, that really provides core technology to the origination and servicing business here in the United States of America. So we're a combination of a number of legacy organizations that many of your readers or listeners will be familiar of. The legacy Black Knight Company, the legacy Ellie Mae Company, the legacy MERS, which serves as the system of record for servicing, as well as the legacy Simplifile, which does recording of security interests at the county level. So at ICE, we pulled these companies together over really the last decade to try to provide a unified technological approach to the housing finance industry.
Right. Let's talk a little bit more about that unification. You've made some investments since the acquisition of Black Knight in bridging what has kind of been a historical divide between origination and servicing technology. How is that investment going, and how is it impacting your clients?
So I'll answer your question very directly.
Yeah.
Well. But I think it's on that point, it's really important to anchor with what we're trying to help the industry accomplish, which is a fundamentally much better homeowner household experience. So if you think, historically, there's just been very much a disconnect between the underlying process of getting a mortgage relative to how that's serviced and the technology that underpinned it. And at ICE, we have a vision that by creating a unified ecosystem where that technology is, unified around that point of origination and what's necessary to complete that file, to get that mortgage funded, get that mortgage recorded and registered, and then have those key data points and documents flow seamlessly into your system of record for servicing to help that servicer interface with the household as dynamically and as appropriately as possible. It's just going to create a win-win-win for the whole, for the whole housing finance system in the U.S. Households will have a better experience with their originator because they'll be technology first, meeting the household where they want to be met within the context of the point of origination. With the servicer, whether it's retained servicing or sold servicing, that servicer is just going to know that household better. They're going to know the background of that household from the point of origination. They're going to be able to interface with that household on a much more intuitive basis and value add basis, and then help that household, from my perspective, much more dynamically as they go through that life of loan journey. When's the right time to refinance? If you is it right to consider a home equity loan within the context of certain life circumstances, or on that best day in anybody's housing journey when you made that last payment,
right,
and you own the house, free and clear, helping get that lien released without any sweat by the household. So that's really that's our anchoring point, which is how can we use technology to help households have a better experience through our partners that provide origination and or selling servicing services.
That ecosystem, you mentioned that as a key word in your last response. It sounds really different from certainly my experience as a homeowner going from the purchase to being serviced.
Yes.
So can you dig a little bit more on that ecosystem concept and how it's going to change things?
Yeah, and it fundamentally gets anchored in the data, right? Knowing that household. So more often than not, historically, a loan would be originated for a household. It would be either moved to the servicing department if it was retained servicing, so the originator retained servicing, or in many instances, the servicing would be sold. So to another third party who would actually collect the mortgage payments. And through those processes, just core pieces of information would get lost. A fundamental understanding of the household that got that mortgage would break down. And that would really inhibit that servicer from engaging with that household in really a much more user-friendly, dynamic, and in many often ways value-add basis.
Right.
And our thought process was that if we can unify those technological platforms, the point of origination through that life of loan arrangement that servicer has with that household, and have those data sets be consistent, have the underlying documents be saved in a safe repository, so if they ever need to be referenced within the context of a refinancing or a home equity loan, or as I mentioned earlier, paying off a loan, you make it easier for the servicer. That would create a much better system overall and really help us deliver for our client base.
And probably from an ROI perspective, retention and recapture is such an issue. This has to improve that, I would imagine.
Yeah, I'll give you the simplest example. Like, knock on some wood around here if I can find it. That we get interest rates to go down in this country, and folks that have had the burden of having to take on these high mortgages over the last 2.5 years and really felt the affordability crunch that we're all going through. If we can get them to refinance much more efficiently when rates do drop, and be able to process that refinancing in a matter of weeks as opposed to a matter of months, then they can start to benefit from those savings of that lower interest rate a lot faster. And by being able to provide tools for servicers to basically leverage that information that rests in MSP, which is our servicing system of record, get that into Encompass, which is our loan origination system, and the supporting consumer engagement software that we have, you can just help turn that refinancing around faster and a much more transparent rate for the household, in which they then value that housing finance relationship they have with you as a servicer. And as I said earlier, start saving money faster, which always makes everybody happy.
Yeah, and it's all about CSAT in a commodity offering, and so this improves customer satisfaction.
100%, it really does, right? If you can, if you're interfacing with your servicer, you've noticed rates dropped, or your servicer has been proactively and positively engaging with you, saying, "Hey, we noticed you can save $200 a month, $300 a month." And if you can just work with our portal here to load up these core documents, and we can get you refinanced in under a couple of weeks and start saving that money, households are going to respond to that. Absolutely. And they're going to have just a much more favorable impression of their overall housing finance journey.
So let's talk about technology. I know that's a big focus for you at ICE. People are talking about artificial intelligence and how it's going to transform the mortgage process. How are you integrating new technology into your platform at ICE?
That's a great question, and it's really foundational and fundamental. For us, we're looking at the generative AI tools, large language models, machine learning, to really try to drive efficiency in the system, to basically free up human capacity to do more value-added activities. So, a couple simple examples, which is stare and compare work. There's just way too much stare and compare work in this industry, and we're using data and document recognition tools, indexing tools, file construction tools, to basically reduce the amount of human involvement there is within the context of originating loan, servicing loan, or if a servicing transfer occurs, being able to basically allow that to happen much more efficiently. Yep. So the borrower or the household can be engaged with by that new servicer with the least amount of friction or hiccups. On the customer service side, we've done a phenomenal amount of work that's really paid off within the context of our predictions on like when a household's going to interface with us. Whether that be when they're calling into the call center, whether they're thinking about how those servicers can engage with them around changes in their escrow payments. We've done a lot of large data mining, a lot of large data studies that have helped us be able to push back to our core clients, our servicer base, those predictive models around when their clients, those households, are going to need their help or have questions, such that those servicers can either meet them in advance digitally, or when that household calls into the servicer, that call center professional can be like, "Oh, I see you're calling. My guess is you're probably calling in because of ABC issue." And then the household's like, "Yeah, that's great. You know why I'm calling." Right. And then the call is very positive, and they can solve the problem a lot quicker. So it's really driving to find ways to free up human capital, human talent at the originator or the servicer to do those more high value tasks of making their clients, those borrowers, happier.
Tim, it has been really fascinating chatting with you today. Love this bridge that you're building between origination and servicing. Thank you so much.
Yeah, thank you so much. I really appreciate it.